Hello, everyone. This is Andrew Berman. You are watching another Mortgage Leadership Outlook Broker Edition, sponsored by our good friends over at PennyMac Broker Direct. We had the pleasure of working with PennyMac on identifying some of the top brokers in the country. And yes, I'm going to shut my phone off so we don't get interrupted. And please do the same. We'll be in and out of this inside of 30 minutes. We're going to so we've been digging into some top brokers in the country, and this is a very exciting one because finally someone from the Northeast. I'm excited to have joining us today another awesome broker introduced to us by our friends over at PennyMac Broker Direct, Jeffrey Desrosiers, who's the president of the Mortgage Corner of New England. Jeffrey, thank you so much for joining us today.
Thank you, Andrew. I appreciate the opportunity.
So listen, I wanted to get into a little bit of your story. When we're talking about PennyMac, they said a lot, a lot of wonderful things about you. But before we go into actually, your current mortgage practice and talk about actually, why you love the mortgage broker model, why your borrowers are best served. A little bit, I got to understand why your borrowers keep calling your process painless. I got to ask about that because you don't hear that all the time. But I want to go back to the history. So take us back 36 years ago. A young Jeffrey decides actually to get into the mortgage business. What led to that decision?
Graduated from college and was looking for a job. Got a job with a local bank in Rhode Island, and they actually wanted me to be a branch manager. I think that lasted like 3 months. I couldn't stand arguing about an eighth of a percent on a CD, and they created a position for me in the mortgage department, and ended up being the best thing for me. Is they basically made me a trainee of the mortgage department, so I got to go from every area of the department: closing, underwriting, processing, servicing, and basically learning the whole business for a year. And it was great. And
So hold on. They created a position for you. So you I guess you got tired of actually arguing over who's going to have the higher rate CD, which at the time, I mean, what were your CD rates at the time?
oh, back then, I mean, my first mortgage 36 years ago was 12 and three quarters. So CDs were like 7, 8, 9%. So yeah, it was just, people coming in and they're like, they can get an eighth better on a CD. And it was just, I couldn't stand it. I just didn't like it at all. So,
Okay, and hold on for a second, kids. Did you hear what the rates were at? I mean, just let's go into that again. So you're selling money at it was like what was like you remember your first rate, the first
yeah,
rate of your first mortgage?
12 and
Okay,
three quarters, and it was an adjustable rate. It wasn't even fixed. I'll
12
never.
and three quarters adjustable rate. So listen, if there's anyone new that's or anyone's actually at season that's been in the business for a while and you've been actually in around for decades, and you've had double digit rates, please comment those rates in the comment box. I want to know what was the highest rate that you've ever sold mortgages at. As I know, I talked to a lot of old school people and they talk about actually the days of the double digit mortgages. That's when my father got in the business, where he dragged me into the business. So if you can, please, if you're watching this live, please comment, what was the highest rate that you've ever sold a mortgage at? Love to get the feedback on that. So
My applicants all the time, they come in and they're 30-year-old, kids, like, and they don't know what over 5% means. Like, they've never heard of that. And I'm like, you guys have no idea how lucky you are. No idea.
Of course, actually, back then you had, you could put, you had down payment assistance programs. If you had, you could put less than 20% down, right?
Yeah.
So talk to us about what was the mortgage environment that when you first came in. So you're dealing with 20% rates. What were the products that you were working with back then?
Well, what was interesting back then was Fannie Mae and Freddie Mac had been in existence for not maybe 5 to 10 years. So the selling of mortgages, securitizing them, was really relatively new. And I'll remember, speaking to the people in the mortgage department, trying to figure out, why are we selling these and not keeping them? Because at the time, we're charging 10%. And, it was interesting how the whole dynamic changed. Like, you didn't hold anything in portfolio. You don't do that now. Where back then, the lenders would hold stuff in portfolio and you could make up your own underwriting guidelines. And that quickly shifted over the years that we've been in the business, that you got to sell it to Fannie and Freddie in order to get the best rates possible.
Well, I'm assuming back then also, if you're doing it as a bank, you're looking for cross-sell opportunities. So
Oh,
you
absolutely.
someone,
Yeah.
yeah. So someone's actually signing up for a mortgage. Like, fantastic. We have this person for 30 years. Back when people would keep their mortgages for 30 years, and we
Oh,
could
absolutely.
cross-sell.
Yeah, but, we would get calls from the trust department, the commercial department, that they had clients who were buying houses or the kids were buying houses, and that's kind of how it was back then. Where, when you took an application, everybody's money was with one or two institutions, and that is so changed today. Where there's no real allegiance to anybody. It's just who's going to get me the best deal.
Interesting. So I mean, listen, I'm knowing a little bit about your business. I want to talk a little bit about your process, about how you're making it painless. But I'm curious. I mean, do you find that today, like your buyers are going to beat you up over eighth of a point difference between someone else?
We don't generally have that. Rate is not our first conversation, and that's mainly because the book of business that I have a partner. He and I work together. Um, we generally people who get referred to us have either we've done their loan once, twice, three, if not five times. We're doing their kids' loans, and it's people who trust us. We've been in the business and in the market for 36 years, and we don't really not, and we're usually very competitive rate wise, because my philosophy is if I give you a good rate and good process, you're going to refer me, and I'd rather get 10 loans than one loan and then have you upset. So we tend to not have those discussions. If somebody calls me up and says, I'm getting an eighth better with, XYZ mortgage company, I'm like, well, let's take a look at it and really see what you're looking at comparatively. And nine times out of 10, we don't lose that transaction.
Interesting. So I mean, what do you find actually? Like, how do you get actually that back? Is it because there's rate buy down? Like, what are you seeing actually that you're able to do on the street that other lenders aren't necessarily able to do?
I think our biggest asset is our knowledge. We know the guidelines front and back. We do a lot of blended loans. We have some local credit unions that we use for lines of credit, second mortgages. We have construction programs. So we've been able to create a niche that there isn't really any kind of loan we can't do. Number one, and number two, if it's a difficult transaction, we'll figure out a way to get it done. And at the same time, deliver good rates. And we know the process. We take a loan, we submit it, it gets approved. I've in the last 20 years never submitted a loan that does not get approved, because if it's not going to get approved, I'm not going to
Wow.
submit. We just don't throw stuff up against the wall and see if it's going to stick. That's just not our forte, and our clients appreciate that. I learned a long time ago, the hardest thing to say in this business is no, but it's the most important thing you learn to say. Because if you say it up front, if it's not going to go, it's not going to go, and you could try to figure out another way. But the quicker you tell somebody yes or no, the better off you're going to be.
Yep. No is a dish not served well cold. That's for sure. And
I,
when it,
but people need to hear it sometimes. Sometimes people just aren't ready. Their credit's not ready, and we'll work with them. We'll get their credit reports. We'll tell them how to get their scores up, and they'll come back to us in 6 months, 9 months. It may take time, but because you can. Back in the day, 10 years ago, you could put them in those no income, all those kind of crazy programs that are out there. And, we try to work with the borrowers so that we could get them a deal that was a good deal that they would be happy with over time, as opposed to putting them into something that, 6 months later, they're calling you up and saying, what the heck did you get me into?
so Jeff, listen, you're obviously you've had a lot of success in this business, but like at some point there was a connection that you had to the business, like where it didn't exist, and all of a sudden, boom, the business clicked, and you're like, okay, this is fantastic. I love this. I found my calling. When would you say that was?
I think it was pretty early on when I was back working at the bank when I realized, what the business was about, because I had no knowledge, about buying a house when I graduated from college. I quickly learned that it's obviously the biggest transaction that anyone's ever going to have in their lifetime, and to to help them through that process. Number one, buying a property, but even when people are refinancing, if you can show somebody you're going to save them $100,000 over, a 20-year period, it changes people's lives. And, for me, that was always a challenge to see what we could do to put somebody in the right position, get them the right transaction. And like I said, if it meant saying no because it wasn't the right thing to do, then, that's what we did.
Yep. Yep. Yeah. Say no, figure out a way to make it happen in the future. So, and when did you actually say to yourself, all right, listen, I'm going to go grab the bull by the horns and I'm going to go and become a mortgage broker and leave the bank?
I was working for a bank, and actually the bank got taken over by the government a year before I left. So I could see the writing on the wall. It was not a good. They had a lot of commercial loans they shouldn't have done. So I went and started the mortgage department at AAA, the Auto Club, and they had never offered mortgages before. They had a financial services department. So at that point, we became a broker because they had no avenue for funding the loans. So I've probably been a broker for 30 years. I've owned my own shop for 20 years, but for those 10 years, I was working for the Auto Club doing loans for their members.
So that's pretty interesting. So AAA was a mortgage broker, so they could offer, to
Yeah,
the
I mean
auto.
they were an auto club. They never did a mortgage in their life. And when I left the bank and said I was going to a AAA, they're like, "What? They're an auto club? What are you talking?" And people don't realize that AAAs are basically like franchises across the country. That if you drove across the country and you broke down 10 times, you might deal with a different club throughout that process. So the one in New England, which is the one I went to work for, was a pretty aggressive AAA club, and their financial services was very aggressive. So they decided to get into the mortgage business, and we had 2.1 million members in Rhode Island and Massachusetts. And basically, people trust AAA. I mean, it was a very, easy transaction for them to say, "Oh, AAA's got mortgages." So that's how we started a program with them, and then we tried to bring it to other clubs around the country. So it was interesting.
Yep. In my teens, I had hand-me-down cars, and those cars would break down, and the AAA membership saved me a couple of times.
Yeah, I'll
So
never forget when I took the job. I used to look at everyone who had a AAA decal, and you really never notice it until you actually are looking for it. And it was like 3/4 of the population in Rhode Island was a AAA member. So
wow.
yeah,
Wow. So that means actually the business was coming to you. You didn't. So between the bank, where I'm assuming a lot of those were, hey, go over to the platform. Jeff can help
yep.
you with a mortgage, and then AAA. So the business just came to you. So when you
That was
so it's one.
I think helped me out initially in the first 10 or 15 years I was in the business, because I built relationship with people, and I still have customers that I did 25 years ago at AAA for a mortgage, or at the bank that I worked for. And, they'll call me up and say, "Oh my God, you're still doing mortgages." And we were able to get that database, and we constantly work our database. And that's where we get our business for the last 20 years. When I left on my own 20 years ago, this last month, actually, I started my own company and left AAA. And it's worked out perfectly. We've built a great following. We don't really do any advertising. We're pretty much word of mouth and referrals from our client base.
So now, what do you feel is there's the reason that you've stayed a mortgage broker? Why do you feel your borrowers are best served by you being a mortgage broker?
I think having the ability of having multiple lenders, and really never having to say no to a borrower if they want a particular type of loan. We have credit unions that we do business with that will do the non-QM stuff. We do construction loans that you just can't sell to the regular, Fannie and Freddie dealers. Obviously, we have regular Fannie Freddie guys for the meat, the easy deals, to get the best pricing. But we always seem to have enough lenders that we really don't have a program we can't do for somebody. And I always felt like when I worked at the bank, when I was competing against people, it was what the rates they were giving me, and that was it. And we didn't have any opportunity to do anything else. So that's why I think broker has been the best fit for me over the last 30 years.
And what makes you decide actually, to work with a new wholesale lender? What led to the decision to work,
I'm
let's say, with Penny
I
Mac?
am very loyal. We had one lender that we worked with. It was a bank in Pennsylvania for almost 20 years, and we had a great relationship. We had other lenders, but they probably got 80 to 90% of our business,
Wow.
and they decided to get out of the wholesale business 3 years ago and just closed cold turkey. And I always had other lenders ready, in case something like that happened. And luckily, Penny Mac was actually the lender that we turned to when that happened. My rep Terry Casey had been with a couple other places and I always liked Terry, and he went to Penny Mac, and I knew nothing about the company, and I think we did almost 90% of our business last year with Penny Mac.
Wow. That's phenomenal. So what is what does a lender have to do today to win your heart? Because obviously, I mean, you've got this great relationship with what would lead to Jeffrey and your partner saying, all right, we would consider working with a new lender.
Honestly, it's communication. The last thing I can't stand is when you get a loan that I know should work, the guidelines work, and it gets declined for whatever reason or suspended, and the underwriter just like refuses to talk to you, or they don't even listen to what they believe the guideline says as opposed to what the guideline actually is. Um, so obviously, being able to communicate, and we have a great relationship with Penny Mac. They've been a tremendous asset to us. And obviously, pricing matters. I mean, you could be the nicest guy in the world and do the right thing for the client, but if you're a quarter or three-eighths out on rate, you're not going to get the deal. So, Penny Mac is aggressively priced. Their technology is phenomenal. I compare it to the bank we used to do business with, and it's like night and day. The refi boom of say 7 or 8 years ago, it used to take us 60, 90 days to close a loan. We're still closing stuff in 30 days with Penny, no problem. Even last year when it was crazy. So their
Wow.
technology really, really stepped up. And I think a lot of that too has to do with the way we take a loan. We put a really good package together. We know what we need, and we get it all up front. So there's very few times you get an approval and it's got 12 conditions. It's just it's usually title, appraisal, and insurance.
Yeah, and I mean, you're anticipating those things. You're making sure you get everything from the borrower. Hopefully, they provide as much as possible from the onset. So now let me ask you this. So let's talk about last year. What kind of? I mean, obviously, we know last year was a crazy year. But what was last year like, and how far off was it from a typical year for you guys?
Uh, Last year was by far the best year I've ever had. I mean, that is goes without saying, and I feel bad because the whole COVID thing hit, and it was funny. The state of Massachusetts, because we're licensed in Rhode Island and Mass, and the state of Mass shut down. Sent everybody home, and 10 minutes later, we got an email from the banking department saying, you're considered highly essential. You got to stay at work," which I thought was funny that mortgages was considered highly essential. But um, in the end, it worked out good for us. It was just me and one other gentleman who came in every day, and we just plowed through it. And it was insanely busy. Honestly, it's been 18 months of just constantly going. It's obviously been a great year, but we just plowed through it. I mean, we talked about hiring people and brings help in, and we knew it was eventually going to slow down. And the last thing I wanted to do was to hire somebody and then have to let them go.
Yeah.
And then the price of everybody had gone so far up because the demand was there that we just buckled down and literally worked 7 days a week, probably for a good year. But
Wow.
it's paid off.
And your staff, how many people are employed by the Mortgage Corner of
Mortgage
New
Corner
England?
has 5 employees. Myself and the other gentleman are the only originators. I have one girl who does compliance 2 days a week, and two other girls who come in and do QC. We process our own deals. We close our own deals. So I take it from beginning to end, and so does my partner Tom. Yeah,
Yeah, and well, give us an idea how many transactions did you do last year?
we closed about 450 loans last year between the two of us.
Wow, it's fantastic. And I mean, what's a normal year? I mean, how far off is that from a normal
It was
year for you guys?
probably double our normal. Yeah, I would say double. I mean, the last 3 years have been really good. I mean, the year before was, I thought, going to be the best year. It's Yeah. I mean, I don't know. Usually two to 300.
Yeah. And do you think this year you're going to do the same numbers that you did last year?
Yeah, we're ahead of last year right
We
now.
had a phenomenal. That's great, and doing it with only 5 people.
Yeah.
That is outrageous. So listen, to be able to do this, kind of production, it takes some discipline. So talk to us a little bit about what is your day like. Because the people actually that are successful, they plan for their success, and generally speaking, their days are pretty well mapped out. I gotta imagine, 30 years doing the business, you're probably a lot of your days look the same. Talk to us a little bit about what is a day in the life of Jeffrey.
Yeah. I mean, on a normal day, I'll come in and make sure that all the closings are set for today or the next day. That's usually priority number one. Priority two is, loans in process. I usually break my day up into three categories. The loans in process, a third of my time, because I own the company, so I do literally everything. I do compliance, I do the accounting, the licensing, all that stuff. So, and that's become more burdensome in the last 5 to 10 years.
Yeah, of
The whole
course.
NMLS and all that other licensing stuff we have to
Yeah,
do
call reports. So
by the state. So those chew up a lot more of my time than I'd like it to be. And then the other third of the time is usually trying to figure out a database, making sure that we have a program that sends out automatic, birthday emails, the sun's coming up today emails, rates dropped, something like that. Some kind of market. We want to stay. We don't want to be overkill, but we want to make sure our clients still know we're in business. Tom and I have been doing this for, like I said, 36 years. So most of the people know. But it's funny. I got a call the other day. A lady I did 25 years ago. She gave me a call and she said, "Wow, you're still doing it." And she wasn't on my database list, so I was disappointed I didn't still have her. I don't think I got an email back then. We only had our phone number. So, uh, yeah, the majority of my day is I do most of the accounting and stuff at night, and then I do mostly the loans during the day, making sure everybody's all set.
Well, that's good. Nice balance there. So, and I was digging actually, through some of the reviews. You got a lot of great reviews. Obviously, we've seen a lot of accolades, for yourself and for the company. But I kept seeing actually people kept talking about painless process. So, talk to us a little bit about what do you do differently that makes your process painless.
Well, I think it's the knowledge we have of what we're getting from the borrowers up front. We tell them right up front. We see large deposits. We see, job changes. Anything that you would call a red flag, we're addressing it before we submit the loan. And you know, we may over document our borrowers in the beginning, but at the end, they're like the closing process and towards the end of the transaction goes a lot smoother. So we just have a feel for what the lenders are going to require.
Yeah.
And we make sure, like, I won't submit a loan till I know it's going to get approved and it's going to get approved with as limited conditions as possible. Same thing with the commitment letters when we're issuing them. We try to make sure if there's outstanding conditions, those are all taken care of before. So you're getting a clean, almost a clear to close when it's time for the commitment letter. Um, and we just talk to our borrowers during the transaction. I mean, it's just really Tom and I work on our own customers. So
Yeah.
when you call, you're not talking to my processor because I don't have a processor. You're talking to me, and so you know exactly what we need, and you know where you stand all the time. There's really no guessing.
Oh, so it sounds like, I mean, and listen, we've interviewed a lot of other successful brokers, and there's one of there's three things that I see consistent with every one of them. One actually is a defined day, with either time blocking or just spelling out every minute, being a master of the guidelines.
Yeah, totally.
Yeah,
I will tell you, I think that's 100% because there's so many times I'll get a client call me and they'll say, well, somebody told me this, and I'm like, well, that somebody doesn't know what they're talking about because that's not how it's done. And I read up on all the updates that Fannie and Freddie send out all the time. The guidelines are changing. We've had times where we've gone to a lender and like, I don't think you're doing that right. And, they'll look at it and they'll go, oh, yeah, okay, you got us. And so, yeah, I totally agree. I think that's 50% of the problem, not the problem, but the ease of the transaction is when somebody calls us, we know, what we're talking about. And they're not getting, well, maybe, or I think, and if we don't know the answer, we'll find it and we'll call you back. We'll get it.
Yeah, and the third thing I was going to say is communications, which is talking to the borrowers, always being available, not sending them to a processor, and just basically delivering those no's fast.
Yep, I agree. And I know a lot of people have assistants and stuff, and that may work for them. But for me, I've just never found that I was able to close the loans and have the borrowers feel the same way if I had somebody else doing some of the work part of it. I mean, if it's something that's behind the scene, like, ordering an appraisal, ordering title, that we can push off to somebody else. But the actual communication, going over the guidelines, going over the details of why I need a letter about a $5,000 deposit, we talk to our borrowers about that. And I think they feel at ease knowing, okay, all right, I understand. And we don't just, the other thing I think we explain why you need something. We don't just say, give us a letter, 5,000, whatever the reason is. We get to the root of the problem and make sure we're getting it done right.
Fantastic. Listen, great story. It's interesting to see actually how far you've come from selling actually mortgages in the double digits, working actually for AAA, and it's great. Jeff, I really appreciate you spending the time with us today.
Well, I appreciate you having me, and it was great talking to you.
Great. And PennyMac Broker Direct, thank you again for sponsoring the Mortgage Leadership Outlook Broker Edition. We've wrapping up this season, with Jeff here, and I really, really appreciate the sponsorship. As many people know, my father was a mortgage broker, and I love the spirit of the mortgage broker, and I personally believe actually that that consumers are best served by independent mortgage companies like mortgage brokers, where actually the people are in the community, they care about the community, and work with great wholesale lenders like our friends over at PennyMac Broker Direct. So everyone, thank you for joining us for another Mortgage Leadership Outlook. We really appreciate you joining us. We go live almost every Wednesday. We're going to be off next week, but please make sure you listen to us on your favorite podcast platform, whatever you're listening to us. And of course, if you like what you're hearing, please leave a review. If you don't like what you're hearing, don't leave a review. All right, everyone, have a great day, and hope your September is a phenomenal one.